Thank you for the introduction. Again, my name is Shirley Huang from Horizons ETF. Today, I'll go through a brief introduction of Horizons and focus on one of our fastest growing mandates, Total Return Index, under a benchmark ETF. Okay. So again, as mentioned, we started in 2005 with a Beta Pro lineup, and now with 93 ETFs available for investors. That's divided into three mandates we have: the active managed ETFs, benchmark ETFs, and our Beta Pro lineup. With 15 billion asset under management, we're considered one of the top 4 providers for ETF investment in Canada. Okay. As you can see, this is the chart. Doesn't matter if it's the fund category, 1 to 10 year percentage. Actively managed mutual funds have underperformed the index benchmark. For example, if you look at the Canadian equity, S&P composed at 3 years, it's less than 3% of actively managed mutual funds can outperform. Let's see this. So at Horizons, we truly believe cost is important. As little as possible for the end users. And we believe there are 3 factors to cost: management fees, tracking errors, and taxes. I'll get into that. So again, today I'll be focusing on our total return lineup. We're different at Horizons. Our suite of total returns are synthetic in comparison to our competitors, which means we don't physically hold the underlying assets. Instead, we go in on a contract with our counterparties. So this is the counterparty, okay. And to whom the counterparties are the top 6 Canadian banks. And then the money that are invested are 100% here, are held in cash, accruing interest, and so forth. With the interest paid, we use that for swap fees. In return for the swap fees we paid our counterparty, they provide us a return of total return index. Therefore, because it's synthetic, there are minimal to no tracking error risk in comparison. So another benefit is our tax deferral. It's one of the biggest benefits at Horizons TRI ETF structure. The traditional funds, if they pay dividends or interest payments for the underlying securities, that means the fund will pay a distribution. The end holders, which is yourself, will pay the tax regardless if it's being reinvested or not. In comparison to our TRI, that's synthetic, the underlying index pays dividends or interest payments and will only be increased by the dividend or interest amount onto the NAV, the net asset value. And that means that the tax liability only are expected on the sale of investment if there is a capital gain realized. This I'll go a little further as we go through the slides. So what are the trade-offs? The trade-off for entering the synthetic ETFs with us is the counterparty risk. Now, the counterparty risk is the likelihood of possibility of a transaction might default in a contractual obligation. Now, for regulation purposes, our counterparties are with the top 6 Canadian banks. And we don't believe the Canadian banks are going to be in bankrupt any day soon. So the counterparty risk only truly exists to a mark-to-market net gain versus no counterparty risk at a mark-to-market net loss. Our TRI ETFs are considered into the mutual fund corporation. Under the same umbrella, we have our Beta Pro ETFs, a commodity ETFs. And during the corporate class structure, there's various, like you've seen in previous slides, ETFs under the same umbrella. For tax purposes, meaning that the expenses and losses in certain class can offset income in one or the other. Imagine as a balance sheet, there's debit and there's credit. They will offset each other. This will reduce the likelihood of a taxable income at any of the ETFs under the umbrella. The next slide will show you a particular example of a market downturn that we recently experienced. Here is as of April the 14th, 2020. The orange here and here shows that we were able to crystallize loss in certain ETFs during this period. That was the beginning of our pandemic period. Let's see here. So to whom are interested in foreign exposure, such as US, international, or global, the benefits are numerous. Investing with a TRI structure, the dividends that you get paid directly from the traditional fund will be considered or taxed at a highest marginal rate. As foreign income, in comparison to ours, you won't, that'll go a little bit later as there will be examples of that, and there will be tax deferral as the benefit. You're not going to be taxed until the day that you, again, are reliable for taxes if you do a redemption if there's capital gains. With no withholding taxes, except for HXQ and HULC, and there's no T1135 tax slips or form to be expected to be filled, as we do not expect it to pay any distributions in our TRI lineup. And the only trade-off that we have is the higher fees, as mentioned, that we have. Any foreign equity exposures in the TRI are charged at a swap fee. Here's our lineup for Canadian equity side who are interested. For our Canadian TRIs, we don't charge any swap fees. And foreign equities such as S&P 500, a US, or the NASDAQ 100. Here's what we offered for foreign equities. And this is the example I would like to get into that we talked about. So hypothetical, if you invest in $100,000, the physical replicated ETF are traditional ETFs or investment vehicles, and our Horizons or TRI US equity ETF is synthetic. So with $100,000 invested, let's assume there's market return is zero, just to be fair. The net of dividends that's been made is $2,000. You have $2,000 now increased in your portfolio. That being said, because it's a foreign distribution, you're taxed at the highest marginal rate at a 47.97%. That's close to 48%, equivalent to $999.40. So as you can see here, because of the foreign taxes compared to here, it still remains the same. Total tax paid, you're paying approximately $1,000. That means from all the gains you receive from the $2,000, you actually only have in pocket of $1,000 in comparison to what we have at Horizons. You still remain, your $2,000 is still remain untackled. So at the end of this, you're actually at a loss of tax on the distribution of 0.99%. We also offer in fixed income for a total return suite, Canadian Selective Universal Bond, and so forth. So to whom are advisors or investors who have a high cash flow, doctors, lawyers, accountants, or business owners who wants to reduce their business income, this is a popular choice for many reasons, as I mentioned, tax defer, management fees, and low tracking errors. Here, this is just the investment objectives, which you can also find on our public website for all of our total return index ETFs offered. We also offer our Asian services in Mandarin and Cantonese. You can also find my information for any questions you may have after our session that you're interested in about our products at our www.horizonsetfs.com under About Us. You can find my information there. And thank you for listening. If you have any questions.
Yeah, the first question here I have with the audience is from Clark. Do you know, because this year is very special, like, do you know which sector or what kind of your ETFs, as a general question in Horizon ETFs this year, do you see a growing demand this year compared to before?
Like I said, our growing demand are in our total return lineup. And there's various sectors, and I can't really jump into particular what sector. But if he's interested in the particular products that he has in mind, love to reach out and I'll be able to provide some answers from there.
Okay, sure, no problem. I will let him contact us after to leave the information if he has more specific question.
Yes.
Uh, the second question also. So what would happen if there are some, let's say in the cannabis ETF, what happens? This is another question, more bearish. When there's a bunch of bankruptcies happen within that sector, what happened with that for that ETF particularly? Do you know?
Well, I'm assuming that he's talking about HMMJ, which is our marijuana ETF.
Yes, yeah.
It's a
If
benchmark ETF, so that means if anything goes down, it will go down as well. So it's not like we're gonna go in and it's a benchmark ETF, yeah.
okay, and and then we have a few other questions here while we're waiting for others to roll in. This on your alley. All Horizons ETS products are SP, TFSA, RIF, and LDSP eligible.
So, yes, all of our ETFs are available and eligible to be held within all accounts.
Okay, and how do these total return funds differ from other corporate class funds?
Mm. So our total return funds are different in, like again, it's in the synthetic versions, derivatives in comparison to the traditional, which is physically held strategy, and compared to our competitors. And the benefits are a lot like low tracking errors and tax benefits. And some of them are one of the lowest management fee available in the market as well.
Okay. Yeah, and then there's another question that we have for you here. So besides the Canadian residents, how about the U.S. residents or other residents? Can they invest and buy Horizons ETF products?
So our ETFs are listed in the Toronto Stock Exchange, and our regulators are Canadian. However, non-Canadian residents, such as US, can purchase our ETFs, but they have to find their own broker or own individual platform to be able, or that sells it on the Toronto Stock Exchange.
Okay. And also another question here, from Tony here. Do you have any? This is more high level question. What's the any planning for the next ETFs, the new ETFs coming into pipeline?
We always have planning for new ETFs, but to what it is, we're not sure of. But we're very innovative. We're very innovative. As I mentioned, we have 93 products on the light shelf, and you know what? Doesn't mean we're not going to have more. We're very innovative. As long as there's potential and the interest, there's potential of creating more ETFs.
Okay, maybe this is one question from myself for you. You're based in, I think, Toronto. If people in, let's say, Vancouver, other places will have interest or questions, how do they contact you?
Yeah,
How
so
to
they can
contact?
find my information. It could be anywhere. Again, we offer Asian services. If you do have questions, English or Asian, Chinese or Cantonese, doesn't matter. Just reach me on the public website. You can find it under horizons.com, horizonsetf.com, about us, and there will be my information there, either by a phone call or email. I'll get back to you guys.
Yeah, so I presume you speak multiple languages, right, to be able to accommodate different people asking you questions,
Yes, just like
inquiries.
yourself, I do speak Mandarin, Cantonese, and a little bit Japanese as well. So
Oh, okay, that's really cool. Okay, I think that's about it. We finished a bit early, so I will let you go now.
thank you so much, Gabriel, and stay safe, everybody. Take care.
Yes, thank you.